Well, I think the market feels that it went through a very short correction in price last week and realized that the Fed probably is not going to be that aggressive about raising interest rates. They probably won't make any kind of a tapering timetable announcement after the Jackson Hole meeting, and at the earliest will make an announcement at the September FOMC meeting. So it seems as if the Fed wants to keep rates lower for longer, and that's encouraging those sectors that tend to perform better with lower interest rates. With Pfizer's approval, that basically says that there is going to be increased push for the unvaccinated to become vaccinated, as well as those who have already received 2 injections to be able to get a booster shot later on. So I think what it implies is that we're trying to get ahead of this COVID curve. And as a result, even though there are some concerns right now, we will be able to get ahead of them and allow the economy to improve in the months ahead. And there are some people out there who will get a vaccine if they believe that it is safe and that there's been enough time and test to be able to back up what the vaccine is likely to do for them. So I think that they remain on the fence, but the longer that people do go by showing immunity or at least resistance to the COVID virus could allow these fence sitters to finally get that vaccine. I think the Fed would like to see some more economic data to really sort of tip the scales to encouraging Fed officials to start a tapering timetable. Because when you look back to 2013, everyone seems to be worried about a taper tantrum. But actually what happened was simply a less than 6% decline on a closing basis for the S&P 500 that took 17 calendar days to get back to break even and was higher by more than 15% 6 months later. So really, if the Fed does start to taper, what it is telling investors is that the economy is strong enough to stand on its own 2 feet and that corporate profits have the ability to continue to rise. Our belief is that the Fed probably will announce a tapering schedule at the September meeting, and that will probably end up seeing the first round of tapering take place by the end of this year. That's the current thought. If we find additional economic data that comes in weaker than expected, then maybe they push off the beginning of the tapering until early in 2022. But right now, our belief is investors should prepare for a late 2021 tapering. Well, the good thing is that investors are not retreating. They are simply rotating. They are jumping from one lily pad to another, if you will, from growth to value and back. Looking at history in the 6 months after the taper tantrum of 2013, the 4 best performing sectors were consumer discretionary, industrials, materials, and tech. So interestingly, we see that 2 are from the growth area, 2 are from the value area. What is certain is that the defensive sectors are likely to be the underperformers if we do start to see investors pick up their optimism toward the economy, earnings, and stock prices.